This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Yes, indeed, everybody. A very good afternoon on this busy Wednesday. Carol Massar, Tim Stenovec. Nope, we're not at Bloomberg headquarters. We're just a few blocks away. We're here at the plaza at the Bloomberg Global Business Forum. And what's great about this event, it always takes, or it always happens, I should say, alongside the UN General Assembly. So there's world leaders in town. They're talking about the top issues. They come here to have some really high-level discussions.
Yeah, the event brings together heads of state and business leaders to address the world's most urgent challenges and opportunities. And already we've heard from some of these leaders. Bill Gates taking the stage a little earlier. Ruth Porat from Alphabet. Jane Goodall was here. NBA Commissioner Adam Silver. Brookfield's Bruce Flatt. And many, many more.
All right, so we're going to highlight some of those conversations and some of the folks that are here at the event. Coming up, Chris Nicholas, he's president and CEO of Sam's Club. We're going to talk about global consumers. We're going to talk about tariffs, supply chains. We're going to talk about their expansion plans. So looking forward to a conversation with him in just a moment.
Maybe we'll talk a little bit about AI with him, too.
Yeah, we definitely will.
We're also talking AI with the head of strategic partnerships, global affairs at OpenAI. Also talking about that big NVIDIA investment. That's up ahead in the next hour.
That's a partnership.
That is a partnership, yeah. To the tune of $100 billion.
Yeah, massive. Also with us is Ambroise Fayolle, Vice President of the European Investment Bank, on funding climate change initiatives against what is, I think safe to say, a hostile backdrop. So we're going to get into all of that in just a moment. First up, though, feels like a day where we're taking a little bit of a breather on Wall Street. Let's toss it back to Bloomberg headquarters here in New York City and Detroit.
Hi, thank you very much. Holding down the fort, and indeed, absolutely right about that. Taking a breather, Carol Massar. We have got the Dow, the S&P, NASDAQ. We're all in the red right now. S&P down 26, retreating from a record 66.31 where we stand. Down now by about 0.2%. Dow Industrials down 0.3%. S&P, by the way, off session lows, but still down. We've got NASDAQ down 0.5%. The NASDAQ 100 index down 0.5%. The Bloomberg Mag 7 index had been positive very, very briefly. Right now it is down by under 0.1%. Your 10-year currently yielding 4.13% with a 2-year, 3.59%. Gold down $30 the ounce, 37.33, down 0.8%. And West Texas Intermediate crude oil now rallying by 2.4%, 64.93 a barrel. Alibaba ADRs soaring after the company said it will spend more than a previous 3-year investment budget on AI infrastructure, just as investors turn more positive on its push into the technology. The company also announced a new software partnership with NVIDIA. Alibaba shares, they're up by 8.3%. NVIDIA down now by 0.8%. Again, recapping here, S&P down 26, drop there of 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stenovec, live here at the Bloomberg Global Business Forum at the Plaza in New York City. Well, if you want to know what global consumers are up to or what massive global companies are really thinking about when it comes to the macro environment, what are their priorities, then keeping an eye on Walmart is definitely a must-do. It is the world's largest retailer. It was among the retailers that recently raised their forecast. That happened over the summer. And a member of the company's C-suite is joining us, Tim, right here at the forum.
Yeah, here at the Bloomberg Global Business Forum, pleased to have Chris Nicholas with us, president and CEO of Sam's Club. It is Walmart's membership-only retail warehouse club, mostly with clubs here in the U.S., but also overseas clubs in Mexico, China, and Brazil. Former COO of Walmart U.S., previously CFO across Walmart U.S. and Walmart International. Welcome.
Which means you've seen everything.
I've tried.
How are you?
I'm doing great. Really excited to be here.
How are we doing? And by we, I mean the American consumer. You've got such a great view on what happens across the country. How are we doing?
Yeah, I mean, what we're seeing at Sam's Club is consumers that are consistent and rational. I've been in retail for more than 30 years now, and I've never known a time when people don't love great items at great prices. And as long as you're giving people that, we're finding consumers really, rational and consistent.
What is their behavior, though, right
Yeah.
now? Because that's something Carol and I were talking a lot about today. And, the whole idea of, are they buying what they typically buy? Are they buying what they buy at a certain point in an economic cycle? Are they trading up? Are they trading down? What are they doing in your stores?
Yeah, it's interesting. Consistent would be the word I'd use. People are still buying general merchandise from us. We talked in our last quarter results about general merchandise sales having another quarter of positive comp. But what's really interesting within that is that the units are moving faster than the items, which means that, we're still giving them great value. And I think people are really moving to appreciate when they're getting good value. The club warehouse model is made for times like these, I would say. It's a good time to be in the club model. In our clubs, we've only got 4,000 items. And the way that the club model works, just to level set us, is our job is to make almost nothing on what we sell. We just about break even, and we make all our money from membership. So the lower you can operate in terms of costs, the lower you can keep prices. And when that happens, people are more loyal. They renew more often, and you get more members. So we're in this really special moment right now where people love the great value that we've got, and they love the great items that we've got too.
I want to cross that with what we just heard from Fed Chairman Jay Powell, Chris, last week in terms of the decision, and kind of basically saying the Fed's not in a great place. Either way, there's some risks to the employment picture. They're concerned still about inflation. So there's kind of risks to both sides of the equation, and concerned about monetary policy that it's hard to do right now in this environment. So that to me sounds uncertain, unsure, but it doesn't sound like you're saying any of that.
Look, the club, here's the thing. We have this position where there's only, between us and our main competitors in the club model in particular, we're only 6.5% of the total retail market. And we would definitely, from a club point of view, our consumers definitely skew sort of more wealthy, bigger basket sizes. And but we do serve everybody. And we don't see a great delta between different income cohorts.
You don't?
No.
All right.
Nor generations.
Well, what about, when you think about kind of the environment, especially when it comes into tariffs, in terms of pricing, how do you kind of figure out where you can maybe raise prices, where you can't? It's
such a great question. And again, not to sort of pivot, but one of the powers of the club model is because you've only got 4,000 items in the club. Those items are curated.
Yeah.
And our merchants, they are true professionals. Many of them have been in their jobs decades, and they understand the value chain from end to end better than anybody. And so they get the ability to choose what's in the club, but they also get the ability to work through where the inefficiencies are in the supply chain. They've got deep relationships with the suppliers, so you work through where the opportunities are between the suppliers too. So I'll give you an example. Our roses that we buy from Ecuador, the costs went up because, the tariff environment changed. And so our merchants worked through with the supplier, what could we do? So we moved them in different ways. So we have less packaging. We wrap them in the US now instead of where we used to wrap them. And so you do things like that help you to manage the input costs. That means you don't have to pass it on to the consumer. And our job is to work through how little you pass through, and you work through how late you do it. So we'd always like to be last up, but we have the ultimate opportunity in the club channel, and that is that we have choice because we don't have to sell everything. So the curation actually is a superpower for us.
Does that mean you haven't raised prices on anything?
No. We see. Look, here's the thing. There are certain things where prices move all of the time. Anyway.
Right. I
so
get that.
Produce would be a good example of that. And there are some
strictly
things
tariff related.
Yeah. What I would say to you is that if I think about general merchandise, which is all of the electronics and apparel and all of those things.
The stuff that I have way too much in my home.
There's never enough.
Yes, there is.
You're talking to guys who sell stuff, Carol.
Never enough.
I know. But anyway.
Please buy more.
But in terms of tariffs, particularly putting pressure on pricing.
Yeah, so what we see is, in terms of what people are buying, I think I mentioned this, but the growth in the units that we've had is outpacing our comps in general merchandise. So if you think about over the last few years, you had packaged goods through COVID became more expensive, and they never really came down. Whereas general merchandise, we had the supply chain disruption. You remember that, and the general merchandise inflated, and then it deflated rapidly after all of the supply chain disruptions disappeared. And at the end of last quarter, we were still in a period of slight deflation in general merchandise. So prices move all of the time. Our job and our merchants' job is to make sure that we give people access to the price points they want and the value that they want. I think maybe it's worth mentioning, but in Sam's Club, like, we're 25% cheaper than retail in general. So as we resist putting prices up, because that's in our DNA, we're always going to be more price competitive than everybody else.
So then you haven't raised any prices related to tariffs?
We will be the last people to put prices up, and some prices have gone up, but in the mix, I'm telling you, so for sure, I mean, we have input price changes in some items, and some's come through already and some is still to come through. But I would tell you that, like, our job is not to lead with putting prices up, and all of our sales growth in Sam's Club is through unit growth, not inflation.
Okay, cool.
I'm wondering what you're hearing from your team who's out there talking to the producers, the American producers of things we grow, produce, beef as well. We had a Bloomberg News story last week about farmers and the toll that the Trump administration policies are taking on farmers right now. And immigration, just one of them. Tariffs on soybeans are another one as a result of less interest from China and Chinese buyers. What are you hearing, though, on the immigration front? Because in some cases, 40% of migrant workers are from outside. 40% of farm workers, rather, are migrant workers. So they're coming from outside the U.S., and that's a challenge for farmers to actually find those employees right now. What are you hearing from them?
Yeah, I don't have anything to add or to offer on that topic. I would tell you that we have brilliant farmer partners. We understand the value chain really well. And we have no in-stock issues or cost price issues.
So have they raised prices at all on American produce?
You'd have to ask somebody else about the through line on, like, employment and price increases. I think you probably speak to lots of people that are better informed than I am.
What about from produce that comes outside of the United States? I mean, we can't do everything here. We can't grow bananas. We can't grow avocados.
Avocados,
Tomatoes, when they're out of season, come from outside of the U.S.
Yeah.
What does that look like?
Yeah, I mean, what does
what look like? The increase in costs associated with tariffs, because those will be, or those are tariffed already. I mean, beef that comes from Brazil, 40% tariffs, for example.
Yeah, I mean, we definitely over-index on U.S. beef. The vast majority of what we buy is U.S. The vast majority, and so, you know, but we have choices about where we buy from. This is the benefit of being this curated, limited assortment retailer, is that we get the choices to buy from the places which give the consumers great value and great quality, which we're never going to relent on. But, you know, we buy items, you know, we buy avocados, as you said, from abroad, and many other items, tomatoes when it's out of season. And you know, the quality and the value, we'll never relent on the quality. But if the input costs increase, then the input costs will increase. But in produce, there are so many variables, produce and beef. Right. I mean, there are so many variables that pushes the costs down as well as up. So I think it's a super complex situation, and I think that our farmers are some of the best in the world, and I think that our merchants know how to work with the farmers. The best thing you can do for those farmers is to give them great forecasts, allow them to grow to those forecasts, and give them good prices that allow them to run sustainable business models, and we do a really good job of that.
Chris, you guys in retail, I'm sure we're, you know, even late to talk about the holiday season and the upcoming holiday season. When you think about assortment and what you want to have in inventory for consumers, how's it looking for this year? Is it going to be a lot different from last year? Are the supply chains all there to get what you need and what you want for your consumers? Yeah,
that's not an issue. We don't see any issues with supply chain management in that way. Sam's Club in particular, we get really early. So you go to a Sam's Club now, which hopefully, you know, please do. You'll see it's full of Christmas.
I know. It drives me a little crazy.
Yeah, I mean, I understand.
Why is it so early? I mean, Halloween hasn't even happened.
Yeah, well, in the club channel, people like to be prepared.
I know. Yeah.
So we get into a season early, and then we exit early, and that's kind of scarcity is part of the value that we create. And so we're not worried about it from a Sam's Club point of view. But the thing I would say is that, like, people just love to celebrate. They love to buy. They love the seasons, and so I think you'll find that certainly at Sam's Club, people, whether it's the general merchandise they buy pre-Thanksgiving and Christmas or the food that they buy for the season, as long as you're giving them great value, they're going to come to you. And people will find a way to celebrate.
One of the things we love about the Global Business Forum is we tackle everything: climate change, workforce, employment, economics, politics. As a leader who's been at a company for a long time, and I'm sure looking at everything that's going on, what's top of mind for you? And an environment where there's pushback against certain initiatives, there's a lot of political things going on, geopolitics. I'm just curious. In running what you guys do, and I know you're kind of a well-oiled machine in many ways, but I'm just curious.
Yeah, I think, in an environment of change, and by the way, change is a constant, and you've got to love it. Then I've always found that the best thing to do is to focus on what you can control. And what you can control is the culture you create as a business, how you work with and treat your customers and your members, the experiences that you create. A great example is the e-commerce business. We've just launched express delivery from our clubs, and people love it, and they're opting in.
Does the price change with delivery?
No, we have price parity. We have price parity. So others don't. We do. So we have price parity between clubs and online. We think that's really important from a trust point of view. And people are thanking us for it. Our delivery from club, food and non-food, is growing at triple digits right now. Wow. So I think focus on what you can control. Start with being great people. Start with being a great business. Look after your associates so they can look after our members. And then, that generally will lead to the right outcomes.
So on that, we'll hear from one of your big competitors tomorrow. Costco reports earnings tomorrow. How do you make sure that people join Sam's Club and not Costco?
Yeah, look, Costco is a great competitor. We think that we're great too, and we're doing a lot of good things. What I would tell you is this.
Because you have an aggressive plan in terms of expansion.
Yeah,
and
we're
lining up
excited
members.
about it.
I know.
Yeah, we're really excited about that plan. Actually, the club channel in general is a relatively small channel. There's huge upside for the whole of the club channel. And I would tell you this: good competition makes you better. And I've never been afraid of good competition.
What about AI? And how you guys are working.
Are you afraid of AI?
AI,
we're trying to...
AI is a big topic everywhere now, isn't it? Here's the thing. We're excited about AI as a company, and I am personally too. I think this idea of...
Are you guys using it a lot?
A lot. We've been using it for a long time, honestly, but the generative AI and then the agentic AI that's coming through too is really exciting. It's exciting for our members and for our associates. What we do, we pivot to growth. How does this help us move faster, do more for our associates and our members? How do we find different routes to market? So that's exciting. Of course, we also look at how do you find opportunities to take time out of product launches and all of those kind of things so that you're a better business. The one thing that you may have seen is we also believe that the opportunity to empower people with the use of AI, but with an enterprise, but with enterprise data, is really exciting. So whether it's in the office or recently, we made an announcement a couple of weeks ago at our holiday meeting, where we gave our frontline management access to OpenAI, to ChatGPT, and which they can use to just go faster and do more, and that's really exciting. Yeah,
it's kind of amazing. We're all kind of finding our way through it. Chris, thank you so much.
Thank you for having me. I appreciate it, and good luck.
Good luck. Thank you as well. Chris Nicholas, he's the president and CEO of Sam's Club. We just talked a little bit about AI with Chris. We're going to continue that when we check with the head of strategic partnerships, global affairs at OpenAI. Yeah, we'll talk a little AI. That's coming up next. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down Wednesday here with the Dow, the S&P, NASDAQ. They're all declining right now. Wall Street's rebound failing to gain traction today with the S&P now at 66.28, down 28, drop there of 0.4%. The Dow down 168, drop there of 0.4%, while NASDAQ is down 114 for the NASDAQ Composite Index, a drop of 0.5%. 10-year at 4.14% with the 2-year, 3.59%. Gold is down $36 the ounce at $37.27 for the precious metal, a drop of 1%. West Texas Intermediate crude up 2.4%. WTI 64.93 a barrel. Bitcoin up 1.4%, 113,637 on Bitcoin. As for valuations, the S&P 500 is trading at statistically expensive levels, according to Bank of America's Savita Subramanian, who notes that on 19 of 20 metrics, the U.S. equity benchmark is expensive. Copper prices jumping the most in more than 5 months after Freeport-McMoRan declared a force majeure on contracted supplies from its Grasberg mine in Indonesia. There was an accident there that killed 2 workers. Right now we have got copper surging 3.6%. Freeport-McMoRan down 15.2%. Other miners, though, higher. ADRs of Glencore up 2.6%. Tech Resources up by 5.5%. Recapping, S&P down 26, down 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stenovec live here at the Plaza, the Bloomberg Global Business Forum. Leaders. And one of the big topics this week that we've seen as world leaders are in town and also as it's Climate NYC is everything and anything to do with artificial intelligence.
I mean, we can't kind of stay away from headlines here every single day. Just today, Microsoft partnering with OpenAI rival Anthropic to help power its workplace AI assistant. Anthropic, founded by former OpenAI employees, Carol, it's one of the largest competitors to OpenAI, a key player in the industry.
Yeah, just coming on the heels of one of the big stories that we covered this week, NVIDIA announcing it will invest as much as $100 billion in OpenAI to help with that build out of data centers. So there's a lot going on. When it comes to AI, it's all about partnerships, and we have a great guest to talk about that. Lane Dilg is former head of strategic partnerships, global affairs at OpenAI. She's had a career in law, politics. She served as senior counsel to then Senator Kamala Harris, and she's also worked at the Department of Justice. I'm rushing, but you have like this incredible public-private background. So when you think about AI, I don't know. How do you make sense of it just feels frenetic, the amount of money, the amount of activity, the amount of headlines that come every day?
Yes, there obviously is so much happening, so many big deals in the news, and those big deals in the news do have real-life implications for all of us. So incredible, as you mentioned, to see the NVIDIA and OpenAI deal showing that NVIDIA will provide chips to OpenAI up to 10 gigawatts and also make an investment, $100 billion, obviously shoring up OpenAI's credit and providing a real runway for OpenAI. Those kinds of deals we are seeing almost weekly right now. You mentioned Microsoft and Anthropic as well. So a very, very competitive landscape and a landscape that is moving extremely quickly.
It's kind of funny to hear about Microsoft partnering with Anthropic, given that Microsoft is a huge investor in OpenAI. What do you make of that? Like, what's the world that we're living in when you have these strange bedfellows?
Yes, I think everyone is watching sort of all of these different pieces. From an adoption perspective, people are looking at how many different companies will individual companies work with. So do you want to work with one AI model? Do you want to, or one AI model provider? Do you want to work with many? Microsoft also has in-house AI. Yeah. They have the partnership with OpenAI, and now you see them with Anthropic.
Well, can you... We've had some folks come on our program and say, okay, there's been so much funding, there's been so much money chasing these companies. There are also those people who say, we're kind of just going to wait until the dust settles because we think there could be this commodity issue when it comes to LLMs. What separates one LLM from another? What separates Claude from ChatGPT? And I fully... We're asking somebody who was at OpenAI. So
yes,
that's where this question is coming from.
A great question, though, because obviously now I use all of them to try to stay up to date on where everyone is. And I also speak with the different companies about sort of what their trajectory will be going forward. I do think the models are somewhat different just for users. They provide responses a little bit differently. They're friendly in different ways. They're useful in different ways. And so there's some personal preference. I do think that we will start to see differentiation innovation in areas like material science, chemistry, biology, as people really move into these more specific domains where different model providers lean in, who they work with and how, will become important in terms of what you can do to solve problems with the technology. I think the other piece, as you see with the NVIDIA OpenAI deal, we often say infrastructure is destiny. It is true that there is also this massive race for compute, and that is because to continue the research and development, to continue to make the progress, you need compute, and compute requires a lot of energy. So we don't know yet whether there will be differentiation there or not, but everyone racing to make sure they have the compute they need to continue development.
Wayne, you run your own advisory firm, and you're dealing with kind of innovation and partnerships, right, and working with other companies. But I want to go back to what Tim said. I mean, I think there was, when the NVIDIA deal came out, that there was concerns that it was a sign of a bubble, that it's NVIDIA partnering with OpenAI. Obviously, it's the company, ChatGPT, so identified when it comes to AI at this point, but this idea that NVIDIA needs a marketplace to keep buying its chips. So I'm just curious. I mean, at some point, I don't know. What are you hearing from companies as you talk to them? Are they a little cautious at all? Is there any nervousness about this incredible spend and this incredible build out?
Yes, a great question. Obviously, financial experts around the world asking many of these questions. I think, we previously thought that NVIDIA may not be able to supply enough. So interesting to now hear people say, well, they are, trying to find a consumer.
A home for their chips, it feels like, right? Yeah.
So I think that conversation happening on both sides. My own personal view is that we are not yet anywhere close to maxing out the demand for compute and chips. And when we are, then you may actually see that model development is stalling or something else. But I just don't think we're there right now.
I am curious, when you were at OpenAI, and we know you left a few months ago, and now you have your own advisory firm, is the phone ringing off the hook of people saying, help me, I need to find this, and what are they looking for?
Yes, so it is true that people are looking for lots of answers. They're looking for answers to the macroeconomic questions. They're looking for answers to help them guide investments. But then teachers and healthcare providers are looking at, what is the potential? How do I take care of my workforce and also take care of those I serve at the same time? What is the pace of adoption? I'm excited to be here today with Bloomberg Philanthropies working on the Mayor's Challenge, which is a competition they run around the world for mayoral innovation for city services. And so many people in that space saying, where are the opportunities for innovation? And we're seeing such interesting proposals there as well.
I just want to say, I actually had a meeting with a giant company. I'm not going to say who it was. And
we've heard of them.
Everybody's heard of them. But it was like we were talking about, they were asking me about how I'm using AI. I was asking them, and it's like we're all kind of fumbling our way through. And we have courses that have come up at Bloomberg to kind of help us figure our way through. This company, they're just kind of like somebody figures something out and they do a kind of a show and tell, but it's interesting how we're trying to find our way through this.
Yes, I've heard two CEOs at the Frontier Labs really say the pace of scientific progress on the AI side is much faster than the pace of implementation and adoption. It's hard. These are large institutions with lots of people. You have to actually figure out what is the right way for your company, for your school, for your business, and that takes some time.
I use ChatGPT all the time personally. I use it at work too. We have the paid version at work, but I have the free version on my phone. And when it tells me I can't use it anymore, I just go over and use Claude. How do you prevent that? How do you get me to pay for it? How do you monetize all the free users when so much compute is being used?
Yeah, I think, same with any product in a certain way. You want yours to be the go-to. You want yours to be the most useful, the one that you turn to solve the problems that are most important to you. And I think that companies are competing in that, and we'll see fits and starts. But you get accustomed to one product or another.
So, will we be paying for it?
Well, I mean... Or is there going to be advertising?
Yeah.
So I think, right now you can pay for different levels of access. I think that is meaningful, both for individuals and for businesses. I use the paid accounts across all of the different companies, which may seem crazy, but I want to see where the capability really is. So I do think that is the monetization that you're seeing primarily.
And I'm not a tax professional, but that's a business expense, I would imagine. So but talk to your accountant about that.
Yes. Okay. I'm taking notes.
Yeah, just,
I am curious about, we mentioned that you were senior counsel to Kamala Harris when she was senator.
I have been senior counsel to a senator, but most recently I was senior advisor in the Department of Energy.
Oh, I'm so sorry.
Yes.
That was the notes I had. So
Yes.
I'm so sorry. I do think, though, about the intersection of technology and politics.
Yeah.
And I feel like every decision is made with a careful glance at the White House.
Yeah.
So talk to me about that and how that might, I don't know, kind of impact the deals that are done and how they're done.
Yes, absolutely. I think you see a lot of that in the infrastructure space. So if you look at the models, they, as we talked about, require compute, but compute also requires energy. And as we look at competition between the United States and China, I think people feel really good about our talent. They feel really good about our workforce. They feel really good about our innovation. But we do need to get more energy on the grid, and we need to do that fast. And so I think you see this all of the above approach, but also disagreement over what is that all of the above approach, how does it work, do things need to be grid connected or not, and most importantly, how do we make sure that consumers have the electricity they need at the prices they need while we power all of this AI?
Well, is it ultimately going to be everybody, especially the hyperscalers, probably doing their own energy development on site, that kind of thing? Or
I think you'll see a mix. Just like you see a mix in the financial deals, I think you'll see a mix both to hedge risk, but also because it'll be opportunistic. We need the energy as fast as we can get it.
Hey, just want to end with what this does to the American workforce, the global workforce. Dario Amodei over at Anthropic has been really outspoken about how this could just decimate white-collar jobs. You agree?
So I think there was a conference in San Francisco that people are watching just last week about what the different scenarios are. I think we don't know the answers yet. And so from a policy perspective, we need to be planning for multiple scenarios. It's critically important that we understand both the data of how are jobs moving, where are the transitions happening, and also look at the social safety nets and other things to make sure that if there is dislocation, we're doing the reskilling, we're doing the training to get people into a place that is productive.
You've seen the tech up close. You know what it can do. What keeps you up at night?
What keeps me up at night is, as always, it's the humans. It's our human potential. It's our ability to step into this technology. And it's also what we can do with it for good or for ill. And I think that's the space where I'd like to see the policy focused.
Are you worried about the bad side of AI?
I'm worried about humans using AI for bad purposes is what I worry about more than the doomers who are more concerned about what we would call alignment issues. I think the science on alignment is pretty strong and will continue to be strong, and people will be alarmed if it's not. But the question of what can you do with the technology is a hard one. We are about to all get more powerful.
Yeah, it's kind of interesting. Need to leave there. I feel like we could talk a lot more about this, and we will probably in the future. I hope you can come back.
Yes.
Lane, thank you so much. Lane Dilg, she's former head of strategic partnerships and global affairs over at OpenAI. We're going to continue from the Bloomberg Global Business Forum.
Yeah, coming up next, the European build-out that investors are eyeing. What's really going on with the lending arm of the European Union when it comes to climate change and more. It's Bloomberg Businessweek Daily, live from the Plaza Hotel, the Bloomberg Global Business Forum.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down day here with the Dow, the S&P, NASDAQ. They are all in the red right now. 22-point drop on the S&P 500 index, retreating from a record now at 66.34, down by 0.3%. Dow Industrials right now down 0.3%, with the Dow lower by 132 points. The NASDAQ Composite Index down 91. For NASDAQ, a drop now of 0.4%. The MAX 7 Index, by the way, back in the green right now. Little change. Perhaps that is the real story, the key takeaway, up under 0.1%. Your 10-year at 4.14%. The 2-year, 3.59%. Spot gold down $32 the ounce, 37.30. Drop there of 0.9%. And West Texas Intermediate crude now advancing 2.5%, 64.99 for a barrel of WTI. Bitcoin up 1.5%. Bitcoin now at 113,736. New home sales unexpectedly surged over 20% in August, to the fastest pace since early 2022, likely lifted by builders' rampant price cuts and sales incentives to motivate buyers in a jittery economy. Among some of those home building names are all up, by the way. D.R. Horton up 0.7%. Toll, the luxury home builder, up 0.8%. Lennar up 2.2%. Pulte up by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are here at Bloomberg Philanthropies Global Forum at the Plaza in New York City. And this happens, the UN General Assembly, of course, as you know, is going on. But alongside it is Climate Week NYC. And it's something that has been talked about a lot today at the event. It was also something President Trump talked a lot about in yesterday's address to the United Nations, where he referenced the green scam.
Another UN official stated in 1989 that within a decade, entire nations could be wiped off the map by global warming. Not happening. You know, it used to be global cooling. Now they could just call it climate change because that way they can't miss. It's the greatest con job ever perpetrated on the world, in my opinion. If you don't get away from this green scam, your country is going to fail.
All right. That, of course, was President Trump yesterday in his address to the United Nations. Curious what our next guest has to say about climate, because he is certainly involved in it over in Europe. Ambroise Fayolle is Vice President of the European Investment Bank. It's the lending arm of the European Union, joining us here at the Bloomberg Business Forum. I am curious about when you hear something like President Trump and what he had to say about climate, and then the initiatives that you are working on over in Europe. How do you kind of crisscross those two things? Is Europe moving ahead when it comes to climate change and spending on that and climate change initiatives?
Well, let me tell you first, thanks for the invitation.
You're welcome. Thank you for coming here.
And let me tell you what EIB is. EIB is the Bank of the European Union. Mm-hmm. So we have been, we are a public bank. Our shareholders are member states of the European Union. And we lend for long-term projects that are European projects. And as you know, one of the big projects of the European Union is climate neutrality by 2050.
Right.
And we have put in place, to support this objective, a policy that is our climate strategy that has a few targets, including having more than 50% of what we do in climate and environment. And this is a target that we have reached. We are actually closer to 60% today. We are lending around 100 billion euros per year. So it's a big thing for us in terms of financing for renewable energy projects, energy efficiency, clean transportation, innovation in climate. And our goal is to continue and stay the course, because we think this is also something that is good for maintaining competitiveness in Europe. And we are going to present to our board next week our climate strategy for the next 5 years that will basically continue the pace that we have chosen since 5 years and link that to the competitiveness of the European Union.
So even with a narrative in some parts of the world that are maybe pushing back against climate change and green initiatives, sustainable initiatives, nothing's changed for you guys.
No, for us, nothing changes in terms of the path and the objective. And what we try also to do is to listen to what our stakeholders tell us.
Right.
And for example, some of the SMEs tell us that the reporting obligations are very, very complicated. Mm-hmm. So these kind of things that we are going to try also to address in our strategy. But the key objectives, we are going to keep them.
Can you expand on the idea of competitive advantage a little more? Because here in the United States, as the president, you just heard him say yesterday, he said, if you don't get away from this green scam, your country is going to fail. He essentially thinks that it's a waste of money to actually invest in green initiatives or do sustainable development. That's my takeaway. What's the competitive advantage that you believe the European Union has if it invests in this way?
I would say there are two things. And when you look at energy, we have invested 31 billion euros in 24 in energy projects. 31 billion euros is a lot of money. In offshore wind farms, in grids, in a lot of also solar and nuclear, and then the number of projects that are related to energy. The things that we see is, one, that actually the competitiveness of the cost of energy is going down for many of these renewable energies. Mm-hmm. And it's becoming competitive. And the second thing is when you look at energy, you also need to look at your independence. And what we have learned since 22, and that's why we have sped up actually the implementation of our energy projects, is that if you want to be independent from Russia, you need to have more and more energy independence. Energy independence for a continent that has little energy itself means renewable energy and other kind of energies.
How are you thinking about, and I know the war, of course, between Russia and Ukraine is not over still, but thinking about what might need to be done in terms of helping Ukraine going forward, the financing demands and needs that will be to build back all that's been destroyed?
Yeah, well, actually, it is absolutely clear that the needs are huge in Ukraine. And from the beginning of the war, we have been supporting Ukraine. Actually, even the week after the war, we have, redone some of our loans to be able to send some financing to the Ukrainian government. Since the beginning of the war, we have financed 4 billion euros of projects in Ukraine, and that is mostly in projects that have, reconstruction of hospital, working with municipalities, train capabilities, etc. And actually, we have just opened a new line in Ukraine that where the tracks of the trains will be the same as in Europe. It wasn't the case before. You had between Ukraine and Slovakia, in this case, you had to change trains at the border. Now you don't.
So
have
as you
anymore.
rebuild, you do it.
Yeah, exactly, and
more smartly.
And this is also on the way for accession of Ukraine to the European Union. And we have done something that is not necessarily consistent with our climate strategy, but that we have done for Ukraine. We have just approved a loan that is going to allow Ukraine to finance its gas storage for the winter, because that's an emergency.
We only have about 30 seconds left, but you're here meeting with leaders from all over the world. If there's a message that you have for American leaders and what you want from American leaders right now, what is it?
The thing that I like here is to be able to meet with a lot of people from very various backgrounds and origins and cultures, and that's what makes these meetings so interesting. I mean, the transatlantic relationship is so important that we need to do everything to make us as good partners as possible.
Do you feel like that? You feel that?
Yes.
Okay, good. Thank you so much for finding time for us. We really appreciate it. Ambroise Fayolle, Vice President of the European Investment Bank, joining us right here at the Plaza. Of course, the Bloomberg Philanthropies Global Forum, and we've got more to come. When we get back, though, we're going to do a little check on trading for you guys and some stocks on the move, so do not go anywhere. This is Bloomberg Businessweek Daily.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
She knows.
Hey everybody, this is Bloomberg Businessweek Daily. Carol Massar, Tim Stenovec, live at the Bloomberg Philanthropies Global Forum. We'll have more from the event in just a moment. In the meantime, quick check on the trade for you, and we've got stocks bouncing off our lows of the session, but Tim still down about 21 points on the S&P 500. Dow Jones Industrial Average, a decline of 140 points. NASDAQ 100 down about 0.4%, a decline of almost 90 points. You definitely see investors, I feel like in the last couple of days, taking a little bit of a breather.
Yeah, materials taking a real hit today, down 1.5%. Real estate in the red, down 0.8%. Communication services. We do have 4 industry groups in the green right now. Energy higher by 1.4%. Consumer discretionary, utilities, and consumer staples in the green too.
I'm Carol Massar along with Tim Stenovec. Let's take a look at some stocks on the move on this Wednesday. With us is Bloomberg News equities reporter Alexandra Semenova. She's back there at Bloomberg headquarters. All right, so Alex, let's start with Micron Technology.
Hey guys, yeah, this is a stock that is down about 3% right now, even as it gave a forecast that was generally upbeat, kind of highlighting how lofty the expectations are from investors around AI. fiscal first quarter revenue will be around $12.5 billion. That's above what Wall Street expected. The average was $11.9 billion, but some estimates went as high as $13 billion. Micron stock has, of course, doubled this year, rising at a faster pace than some of its peers, reflecting all the AI-fueled optimism. Strong results from Oracle and Broadcom also added to this frenzy and, of course, raised the bar for Micron. The stock, obviously is down even despite a generally good earnings report. CFRA research analyst said that Broadcom and Oracle results and also a slew of bullish sell-side reviews had raised the bar so high that everyone was preparing for a Micron blowout, rather. So this is why there's some disappointment around this.
Okay, Micron on your radar. Charles Schwab is also a stock that you are watching. What's going on with Schwab today?
Yeah, it is down today along with the broader market, but they did say today that they want to give retail investors access to private companies, given the fact that there is a growing number of firms that have been industry giants before even going public. This is according to their CEO, Rick Wurster. He cited financial technology company Stripe and, of course, artificial intelligence company OpenAI as billion-dollar companies that they want retail to be able to participate in. They also said that employees of these companies would love liquidity for their stock positions. And of course, this follows the likes of Robinhood, which of course was kind of a pioneer in giving retail investors more access to different financial products. They also had said that they want their clients to be able to invest in private companies.
I mean, Alex, you know this more than anybody, right? It's like everybody. It's all about private markets, and in particular, I feel like private credit, that even on the retail level now, everybody's kind of clamoring to figure out how to get it to their clients.
Yeah, absolutely. And I guess this is just a sign of the times, given all the euphoria. When you've had such a run-up in the public markets, it's no surprise that, investors and those offering financial products are trying to find a way to have their clients get into other asset classes as well, given the interest in private companies.
I was going to say, though, Schwab's had a nice run so far this year. I was looking at the DES page. It's up to about 25% year to date.
Alex, you mentioned that one of the reasons Schwab is looking into this is because of those high-flying AI companies. We've got an AI story that you're watching next. Microsoft on the move today.
Yeah, it is. So it is going to start using artificial intelligence models from Anthropic to help power its workplace AI stations. Business users of Microsoft's Copilot branded AI assistant will also be able to use this feature in addition to OpenAI, which they were using previously. Apparently, they'll be able to toggle between the two surfaces. Microsoft has taken kind of a leading position in commercializing AI for the workplace, largely thanks to that partnership with OpenAI, the startup, of course, behind ChatGPT. And it's interesting because Anthropic was founded by a former AI employee. And it also has been one of the largest competitors to OpenAI. So really interesting to see them also take this service on.
I love the strange bedfellows or the odd bedfellows when it comes to AI. It's just everybody crisscrossing with one another. Alex, thanks so much. Really appreciate it. Alex Semenova at Bloomberg headquarters. That, of course, is our Stock Movers podcast. Check it out. It's 5-minute episodes of the biggest winners, losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
Hey, some breaking news crossing the Bloomberg terminal just minutes ago. Medline is considering filing publicly for its U.S. IPO as soon as late October. That's according to people familiar with the matter. What could be the biggest U.S. listing this year. Our team, including Bailey Lipschultz and Anthony Hughes, with this story on the terminal.
Blackstone, Carlyle, and a few others are some of its backers. So we'll see exactly how this one turns out. It's a medical supplies maker. So we've had a pretty busy IPO market this year.
Hey, we're going to have a pretty busy next 2 hours on Bloomberg Businessweek Daily. From the Bloomberg Philanthropies Global Forum, we've got a great program coming up in just a couple of minutes. We're going to hear from the Prime Minister of Spain, Pedro Sanchez. He's going to be in conversation with the Bloomberg News editor-in-chief, John Micklethwaite. We're also all over everything that's happening with Climate Week, and we got a great group of guests coming to talk to us about how they're focused on climate resilience in this day and age.
Yeah, that includes the CEO of the New York Climate Exchange. We've also got the UN Climate Change High-Level Champion for COP27. Remember, Climate Week NYC is kind of a lead-up to COP27. Do not go anywhere. Bloomberg Businessweek Daily continues right here on Bloomberg.